For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Bursa Malaysia has been part of the Malaysian economic growth for over 4 decades. We have been working relentlessly to create a transparent, efficient, and vibrant stock exchange.
While we've been working at building a vibrant marketplace, inclusivity and contributing towards economic growth, we have also channeled efforts and resources towards supporting the community at large. Shares to Share is one such effort, which has been developed to create positive impact towards society and the environment. To put it simply, Shares to Share is a transparent and easily accessible facility that enables investors to donate their listed securities or proceeds from the sale of their listed securities towards charity through Yayasan Bursa Malaysia. You can donate odd lots or even board lots. The funds from the sale of these shares will be channeled to approved charitable organisations and their respective initiatives or projects.
Bursa Malaysia has waived its portion of the transfer fee, clearing and trading fees for all transactions that are conducted under Shares to Share. The participating brokers of Shares to Share have also agreed to waive their portion of the transfer fee and brokerage. The charitable organizations that have been selected have undergone the necessary due diligence process and have been duly approved by an independent selection committee.
At least 500,000 populations live with some kind of disability. They are most of the time being left behind. We need to empower them, otherwise they will continue to be the liability. A lot of human resources wasted from this group of people.
We provide a lot of support for persons with disability who are young adults and adults. We have a social enterprise called Project I'm Possible, where we managed to hire all persons with learning disability to work here. We have a cafe, bakery, weaving, and we have an art gallery.
Purity of thought, word, and deed, that is action, is very important to be really successful. We must know some skills to be able to help us then paperwork. The grant from Shares to Share will be used for, one is sewing, handicraft, classical dance, and so on.
Our patients have to be fed, they have to be looked after. We look out for any sort of disease they might develop, and also those unforeseen circumstances. Thanks to Bursa's initiative, we can be a little bit easy on our patients and their family members.
Donations will all be channeled to organizations that are involved in the sustainable development of Malaysia. The Shares to Share scheme offers you the chance to do so in a simple and effective way.
Bursa's Shares to Share allows us to do good by donating our shares to charities. You join us in making a difference to the society by donating your listed shares.
Shares to Share is open to all donors, individual as well as corporates or other types of entities. You can transfer your listed securities via Bursa Anywhere app at a click. For more information, please visit our Bursa Malaysia website.
Alright, so hello everyone. So welcome to today's webinar brought to you by Bursa Malaysia and managed by Live Chat. So my name is Carmen and I will be your moderator for today. Great, so our session topic for today is ESG. What is it and why is it important? But of course, before we proceed any further, just allow me to do a short disclaimer. So please be reminded that everything that is shared in this session is mainly for educational purpose. By no means that we are providing you any advice to buy or sell any form of security. So you are 100% liable if you make any investment decision. Great. So for today, we are very honored to invite the founder of Want to Invest, Mr. Max Tan, to discuss about ESG investing and how do we evaluate the ESG of a company. So a little bit of his background. Max first indulged himself in the SME financing industry after finishing his diploma in finance and investment in TART UC. He is a former risk and compliance officer from Rakuten Trade and also a dealer's representative from TA Securities. And to date, he has just passed 7 years mark in the capital market as an investor himself, where he also had the opportunity to run the financial blog Want to Invest with over 60,000 followers since 2019. Max has hosted close to 50 interviews with public listed companies in Bursa Malaysia as well as NASDAQ, and had been featured on Singchu, Nanyang, China Press, City Plus FM, Caijing. And of course, currently he is also a XGX Academy speaker. So with that being said, please let us welcome Mr. Max Tan to the floor.
Thank you, Carmen. Thank you, everyone that joined tonight. Thank you so much for joining us today. Let me first share my slide really quickly so we can kickstart the session.
Yep, so over to you.
Okay. Once again, good evening, everyone, ladies and gentlemen, and fellow investors here. And again, thank you, Carmen, for the introduction. So today, as we have mentioned just now, we will be discussing on the topic ESG. What is it exactly, and why is it important in your investment? Now, nowadays, I think ESG has become such a buzzword in the current market, and everyone is talking about ESG, not just limited to fund managers, analysts, and retail investors like you and me has been talking about ESG. So we can see that it's getting more and more important. Now, quick disclaimer, I might not be a subject matter expert on the ESG field, but I hope that throughout the session and after the session, we are able to dive deeper into ESG itself and explain why is it so important for us as investors, especially in the field of equity investment. What are the implications of ESG could give us in terms of return and also outcome? So hopefully we can zoom in into the ESG part for the Malaysia equity market together today. Okay. Now we have a quick disclaimer just now. I'm sure everyone understands the risk associated with investment. So just want to do a very quick disclaimer again, by all means, I'm not a licensed person to perform any kind of investment advice. I'm currently a marketing representative with IFAS Capital and also TA Securities. So in case if you need any form of professional financial advice, I strongly recommend you to consult with a licensed financial advisor or an analyst. So with that in place, we can now kickstart our discussion. Now, ESG. I'm sure everyone here understands what ESG mean as written at down bottom there. But for those who are new towards the market, or to those who are new that you only heard of the acronym ESG, you have not really dived deep into it. So we are going to go into the ESG element bit by bit. And especially, I understand that a lot of investors are only aware of the E element. So please allow me to spend some time on discussing the whole structure of ESG. Okay, so in ESG, we have environmental, we have social, and of course, we have the governance part. There are a total of 3 pillars, and I want to reiterate that they are equally important, right? And they are essential in assessing the sustainability. I will discuss on this word, particularly sustainability, later on. Is very important. And also societal impact in terms of our investment. So hopefully, as we embark on the discussion on each of these aspects, we can use some relatable and real examples to illustrate each of the pillars' significance. Okay, then without further ado, let's start with the famously known factor, the environmental factor. So in short, environmental factor, or the E factor, is all about understanding how a business operation is impacting the earth and what kind of measures they are taking to minimize the impact, or they are contributing positively to mitigate the impact. Okay. To be honest, while we all want to restore Earth to its beautiful nature, there are some products in our daily life we could not neglect or we could not phase out as at this moment. such as plastic bags we use for disposal of rubbish. Of course, when you go to shopping mall, there are recycled bags that you can use, but plastic bag for disposal of rubbish is just an example that is quite hard to replace, or it will be very costly to replace. So I hope this gives you a glimpse of how environmental ESG work. The E is that it's not saying that if you're doing plastic bag, you're not good, or you're doing non-plastic bag, then you're good. It's about how do you mitigate the impact onto it, the whole value chain, and your outcome as well. So back to the example of what is E, let us put it in the perspective of business. So back in Malaysia, I think for the past 2 or 3 years, renewable energy is very much favored by investors. I think this is especially true for the companies that are involved in the solar energy industry. I'm sure investors here have participated in one company actually went IPO this year, but the other companies that are involved in the solar or renewable energy, I think they're performing relatively well, right? So what do this company do in terms of the environmental factor? They play a critical role in terms of reducing the carbon emission by providing a greener alternative to traditional energy sources. When I mention traditional energy sources, we are talking about hydrocarbon, right? So of course, when we talk about these companies, is not just limited to the companies in Malaysia. We have to think of the whole value chain, right? For example, solar industry is just not just about making solar panel, which is the end product of making solar panel, right? But the whole process of it, from sourcing of material, how efficient is your manufacturing process, and how reusable or recyclable are your products by the end process of it. A lot of companies that in Malaysia now for solar, Jinko and Longi, I think they just have a solar panel plant in Malaysia. So it's not to say that company associated with them are immediately equivalent to ESG compliant, no, but to have a thought of the whole process, sourcing of material, efficiency, manufacturing process, and the end process, is it recyclable or reusable, right? And back into Malaysia, so far, I don't think we have any listed companies that are directly involved in manufacturing the solar panel itself. There are companies that helps in manufacturing the frames for the solar panel, but for the solar cell itself, it's mainly still comprised of foreign technology at the moment. But it doesn't mean that we cannot participate in it. Some of the companies that we mentioned just now, especially in the solar industry, they're involved in EPCC, which in layman term, I guess, it will be to plan from day one planning to construct the asset and to run them, basically a turnkey kind of structure. And this kind of company, they are fitting greatly into the E aspect of ESG, because let me give you an example. There's a manufacturer that is using coal-fired plant to generate energy. By the way, 75% of Malaysia's energy is comprised of coal-fired energy. So it's, in a sense that we mentioned hydrocarbon just now, is effectively it's not so clean or not so green, right? But for EPCC companies to help install solar panel at their factory, it would help them to reduce the carbon footprint. So they are helping, or there are several what we call business model to run the EPCC model or the solar in Malaysia. They could construct and then they sell to the owner of, let's say, the factory. They could sell it off to them, and whatever benefits come from it, it will belong to the factory. Or they have zero capex, which we'll also talk about it a bit later on the zero capex, where if you are EPCC company, you just build and you also own the asset because you were the one that fork out the initial capital to build the solar panels. Okay, so these are just very, very small examples of the whole E part, right? Easier to understand because fellow investors here, I'm sure you're aware of the solar companies in Malaysia because their performance are quite well. So these companies clearly enjoy a richer valuation as compared to similar or comparable company peers when we talk about the effort. So maybe some would compare EPCC or they would match with the construction industry because to install a solar rooftop, it doesn't really take a very, very, very high level of technical. That's why we are seeing more and more player, over 200 solar EPCC player in Malaysia now. The margins are getting lower and lower. But that, again, solar is just an example for you to understand. It will not be our focus today, right? That is a positive side if we were following, ESG, because everyone going ESG, the manufacturing plants have demand, the government launching as large scale solar voltaic, they have LSS PV plans for the companies to go and bid and generate, income. But what if you don't follow ESG? What are the penalties? What are the things that could happen to your investment? Imagine that you bought into a company, they do not believe in ESG, which I doubt any companies wouldn't believe in it. But if it does, what would happen to the company or the business you invest in? Again, I'm giving you an example, which the company had some impact towards the environmental factor of ESG. But again, it's purely for discussion. There's no buy or sell recommendation in it. Okay, so there's one particular plantation company in Malaysia. They face some difficulties due to their environmental practices. A plantation company in Malaysia, start with S, I'm sure you can find out. So back in then, there are some issues related to, plantation company in Malaysia. It's in palm oil industry. So there are some discussion in terms of deforestation and also impact of biodiversity. To be exact, there are incidents specifically in Borneo and Sumatra, which these two regions has been impacted by the deforestation, because for planting palm oil, to a certain extent, you have to clear out the land, right? So to a certain extent, there will be classification of deforestation, and it also causes loss of natural habitat for some animals. Now, in normal business operations, this is a normal course of business. I clear the land, I plant the palm oil, and then I harvest it later, I cultivate the palm oil, and then I use it for later on, right? And then I sell the FFB, fresh fruit branch I collected, I process into CPO and also PK, crude palm oil and palm kernel. But this issue caused concern over peatland conversion, which peatland is very important carbon sinks. So from conversion of peatland towards a palm oil plantation piece of land, it causes greenhouse gas emission. So the impact is what? Some of the clients that used to purchase CPO or PK from this company or even FFB, due to this plantation company, their argument on the ESG practices, so they have an issue with their certification on the Roundtable of Sustainable Palm Oil, RSPO. So basically, it's a certification on you being able to adhere to the laws of planting palm oil sustainably. So ISPO, the second one S is sustainable again. So if you have problem on the certification, that means that the palm oil that you supply may not be accepted by certain counterparts. For example, Europe is one of the prime example. So that would impact the company itself. It's not just about or it's an issue about deforestation. In other words, it's not just an issue kasihan about the animal. No. When ISPO certification is being impacted, the company will lose businesses. So they will lose client, and that will result to lower earnings, lower growth, and naturally lower share price, right? So this is just a very small example of what happens when you don't follow the ESG practices. But I think we see a lot of examples about the environmental factor. If you don't follow, what happens? But if you follow, what happens? But not a lot of people talk about social as well as governance, although we have such cases back in, I think, after COVID era. So let's talk about the social factor now, right? In short, the social criteria examines how a company actually manages the relationship towards stakeholder. For example, like employee, customers, supplier, or even extended to how do they communicate with some of the communities. Okay, so take for example, if a US and Europe-based technology company, they come into Malaysia, they are trying to look for supplier. So naturally, they will look for companies that are giving out fair wages, safe working environment, and also respecting workers' right? So social also includes providing quality goods and services, of course, without compromising on the safety of the workers, and also for their supplier as well. Okay, it's always about how do you manage against your stakeholder, right? So again, for the foreign companies that come into Malaysia choosing their partner, of course, they are also valuing their ethical practices now. It's no longer about cost, it's no longer purely about technology, but also ethical practices. Okay. There is like I mentioned just now, the E factor, we can trace back the whole value chain. So imagine that you are dealing with a company that are not having ethical practices when your customers asking where does your raw material come from, and when they trace back to the very early stage supplier that is not complying, you might have trouble. There are incidents in Malaysia where after they trace, they might not accept that batch of inventory or the products that they supply, right? So this is a very serious factor in terms of the social. How do they treat the stakeholder, especially for employees itself? I think a lot of investors here, you'll remember one of the largest manufacturers of gloves in Malaysia, perhaps in the world, have faced criticism over labor issues, especially on the alleged poor working conditions, as well as forced labor. So without discussing too much on this issue alone, you just imagine, let's not talk about whether the issue is real or not real, but just imagine how much resources do you need as a company to respond to these external challenges. You need to spend time from your top management to deal with stakeholder, to deal with your client, to clarify with your media, to clarify with your investors. How much money you need to spend for audit, and the time loss when your manufacturing line is shut down for the auditing. So imagine how much of resources is being lost, right? Fortunately, the glove maker at the end, they take significant steps to improve the labor practices. So now they're able to adhere to concerns. As a result, they're able to gain their customer support again, and to some extent win over some of the investors' trust. Okay, so again, when you look into one particular company, you need to look into their social factor as well. Last time, probably we only look at revenue, growth, P&L. That's all the things that we need to see. But the treatment, the wages, are they treating their, their staff fair? You can actually check this through by going into JobStreet, Glassdoor. You can have a review of what are the people that have worked there, what are they talking, and what do they say about the company itself, right? Whether it's a good company to work at or the working environment is having some issues, because eventually this kind of issue, once they were to, explode, in some sense exploded, so it will impact the company itself in terms of reputation and also operational wise. And again, just think of the resources you need to respond to these kind of external challenges. So yeah, social is very, very important. Now, the next one, the governance, or the G pillar. I think G, governance, is probably the most boring one, but it is also equally important in terms of ESG. So to summarize, the governance part involves a good practice of internal system, your internal controls, your procedure that a company that adopted to govern themselves in terms of how to make effective decision, and what are they doing to make sure they comply to the law, and also meeting the needs of external stakeholder. Okay, so for example, I think all of the banks in Malaysia have very good corporate governance, in the sense that they are very transparent. They have very comprehensive financial reporting, and they also have internal policies that prevent conflict of interest. So I know some of the investors are thinking. Yes, there are people that would go against the governance, even though it is being set, right? But it's important to have governance in place to let the employees follow through, because if a company itself, you don't have a very good governance in place initially, so ultimately I don't think you are able to get your employees follow through. So you wouldn't be able to comply in the governance part. So in investment, generally speaking, companies with good governance will also ensure that the company would operates ethically, right? For investors, you and I, we would hope that our company would not, the company that we invested would not lie to us. And so our shareholder rights would be protected. So we also want to ensure, there's a high level of integrity in terms of who is running the business. Okay. But again, these are the example of what is governance, and banks are doing good in it. But what happens when there's a lackluster in terms of corporate governance? What happened to a company? And as much as I do not like bringing up the case, but I think this is a very good case in terms of reminding investors that what can happen without good transparency, right? One incident that I think brings a lot of Malaysian to shame is the MDB issue. One MDB issue, which is the stark example of failure in governance. I'm sure everyone knows about that the fund was initially created to drive investment for Malaysia economy development, but anyway, we know what happens to it. So 1MDB has a huge problem in terms of the lacking of financial transparency, also failed to provide clear and consistent accounts of its financial dealings. So that leads to significant discrepancies in terms of financial statements. So put this into perspective of a company you are investing into, right? This company you invested always reported very good earnings. They are consistently growing. They are giving rosy picture about their prospects, but they will never disclose in very much details in terms of what kind of business they are actually doing, how do they earn money, and some of the breakdowns. And also they are refusing to answer questions. So when you're faced with these kind of companies, please be reminded that lack of transparency is also lack of governance, right? Be very careful on it. So back to the 1MDB case, which the lack of transparency and also lack of governance has led to mismanagement of funds where billions of dollars is not ringgit, especially when dollars against ringgit is so strong now. Dollars in size are used for unauthorized purposes, and including enrichment of individual involved. I have to say that we are all human. We all have our very own agenda. So having a fair set of governance is very, very important, right? And to put it into perspective, on micro level, having bad governance would impact the company itself and also the stakeholders involved. But for a macro level, the 1MDB case has actually impacted the Malaysian market far more than we can imagine. So for starter, it severely infected Malaysia's reputation in the global financial market. So you can see that there are significant outflow in terms of foreign fund holding for equity market. Possibly one of it is because the damage in terms of reputation. But fortunately, I think things are at least getting better now, right? So again, when you're investing into company, just make sure it's transparent enough. And I think being someone who always study on equity, I can tell you that there is certainly a gap in terms of companies' transparency in Malaysia as compared to other countries as of now, especially when you compare to developed funds. So hopefully we can see more, public listed company in Malaysia that are willing to share more information up, right? So I hope that gives you a rough picture of generally what ESG is, with some of the examples and implications that if you do not follow the guidelines, what will happen and how would it impact your investment, right? Now, the second thing I want to move into is the big misconception. Perhaps before this webinar, some of the friends that I've talked to, they thought about, ESG is just about, making Earth greener, plant more trees and, things like that, just saving the planet. But I want to emphasize that yes, E or environmental factor is important and it is a critical factor in terms of ESG. But for ESG, the holistic view of it, there is much more to it. Okay, let's discuss a little bit more about the two aspects. So taking social as an example, actually from what they do, again, how they react to stakeholders, we can see that how companies, they react to scenarios as well, right? Like, are they giving a helping hand when things are in dire? For example, during a pandemic time, I think most of the banks, they have stepped up by not only helping some of the employees, by also providing financial relief in terms of an installment and also support to some of the clients in need. So, right, this is a social part of, you know, kindness, things like that. But our topic is still investing today. So back into business terms, this is actually smart beyond the, you know, social responsibilities, because when you help someone who is in need, especially is a customer, it will create a lasting impact that the customer is likely to follow you, whether in good or bad times. It is an empowerment on the brand and also enhancement on your brand. So it also creates a power of word of mouth to the people that you have helped, right? So I would say that this is by doing, you know, having social responsibility. CSR has always been a thing for Malaysian company, just that at the point of time, CSR is not really into the big ESG picture yet. Now CSR can be amplified, and more people can, you know, understand how CSR really helps a company. Again, very simple. When they have a stronger brand, although they might have additional costs at the moment by helping out society, but the long-lasting brand or the trust that built over the long time is some sort of you know, economic mode for the company itself, right? So I think for the people who get help or financial relief in the COVID times, more than likely you will stick with your bank unless your bank has significant technical issues. There's always down, there's always technical issue. Then I don't think that's a social aspect anymore. It's a technical aspect. So perhaps that one you might really want to consider, right? And for governance, I think we all remember, perhaps not for some of the newer investors here. If you're new, perhaps you can check on the case. But if you are a senior investor, I'm sure you remember there's another company that's involved in the oil and gas industry, where before the collapse, they actually ventured into the space industry as well. So actually, the lack of governance is indeed one of the reasons. But how do we as investors protect ourselves, right? When companies on the surface, they're painting a rosy picture for you, but they're hiding other non-compliant factors on the back of you. So how do you deal with this kind of situation where on the surface it looks like it's good governance, but in fact, there might be something going on. So there are two hard rules that I would apply into this kind of scenario, right? Number one, cash is always king. If a company always tells you that they are in good business, but is consistently lacking cash, whether it's from receivable, whether it's in terms of inventory that costs them, lacking cash from their operating activities, and they are always in the midst of fundraising, right issue, private placement, perhaps even issue a warrant, but the share price is it's above the warrant, so people could convert the warrant and actually fund the company. And also debt gearing is constantly increasing, so be very careful on this kind of company. If you're in good business, it's likely that you would have a good cash flow as well, right? That's what we define a good business. So look into cash when you are looking into company that seemingly too good to be true. And secondly, we talk about too good to be true now. If there are companies that are delivering results or value at a quote unquote unbelievable rate, so I would say most of the time you're right, it's not valuable. And having a common sense or making sense of your day in, day out investment is very important, right? So as we move into 2024, we have one more month before we move into 2024. I think having understand the moving parts of ESG is very important for you to actually incorporate it into your investment decision, right? So whatever we touched just now, I think is the very surface of ESG. Perhaps we can go a little bit deeper more, right? Now on this slide here, I think you can see that the valuation is higher, net profit margin is higher. We explained a bit over here. So this is actually extracted from a report by PwC Malaysia titled ESG Deals Creation and also Impact Investing in Malaysia. So you can see in the chart itself, PLC, publicly listed companies with ESG investment, have been trading at the fairly higher valuation multiples. So specifically as at the time of writing, of course, right? So net profit margin and also the average return of equity is better. The question is why? Is it just because they are doing good to the society? It's a form of karma. No, there is a logic behind, right? So firstly, we have mentioned companies that have good ESG practices, they usually would have a better branding and goodwill impact. I think that's pretty straightforward because when you incorporate ESG into what you're practicing, your stakeholders would, recognize you, even your customers and your clients as well. They would give you recognition. They will create a branding and also goodwill impact. And this kind of seemingly intangible factor, it will translate into a stronger market presence and you get an enhanced market share out of it. So which will become your economic mode. And when you have a stronger mode, as time progresses, it will translate into your financial figures. So as compared to your peers. So over time, just imagine when someone is compounding on top of their branding and compounding on top of their goodwill, and their peers are, just focusing on how to squeeze the best margin out of their product. So imagine that over the long term, who will create a better return out of it, right? Again, whatever mentioned in terms of the performance of share price is always a function of supply and demand. No more, no less over short term. It's always supply and demand. When there's an increase of demand of the companies that are doing well, presumably, having better ESG practices, hence the better ROE, better net profit margin. That's why you see higher price to book value for the company in the FTSE4Good Bursa Malaysia index, right? And this is especially important for the institutional investors. So imagine that Malaysia is not particularly an extremely large market. As the demand increase, so the valuation of the company also increase, right? There's also only a handful of company, is lesser than 1,000 listed company in Malaysia. So we don't really have a lot of options in terms of good companies in terms of in Malaysia specifically, right? So let's talk about costs. So when we talk about return, there's always cost involved in each and every aspects of every business. So imagine that when you're running a business, the cost cycle start from your talent recruitment, your training, your talent retention, and externally you have to deal with client. How do you get clients? And your client retention and your client referral, right? The more sustainable, again, the sustainable word, the more sustainable your business practices are, as you adhere to ESG practices, it will result in better earning qualities. Why? When you have better ESG practices, you are able to recruit talent easier. Okay, training, I think it remains the same, but talent retention, if you have good, again, S part, the social part, which a lot of people think is not that relatively important. The social part, if you're doing it good in terms of your talent treatment, your retention rate is higher. To train a new talent or to headhunt someone is always more costly than a talent retention, right? Then it comes to getting a client and also retaining a client and also having client to refer other clients to you. So a lot of time you have to invest in getting a new client. You have to build rapport. You have to showcase how capable you are. You have to go through, perhaps for some company in the manufacturing line, you have to go through prototyping. Then you have to go through the mass production. If you are lucky, then you are able to retain a customer. So vice versa, if you're not able to retain the customer, you have to spend, again, time and also resources to restart the whole cycle. So just imagine the cost incurred. So look at the ROE and also the net profit margin. That explains why when you have cost increase, naturally your ROE will be lower. Your net profit margin will also be lower, right? And I'll give you some example in real life example in Malaysia. Let's say technology companies that have good ESG practices, they are more likely to retain talents. I think especially true in the EMS, electronic manufacturing services subsegment. And when their clients audit, it is more likely that they could win over the client. Of course, when this is beyond just client retention. When they are able to get extra new clients, client referral, they are able to better utilize their resources. Let's say the machines are running at 70%, right? So you have a new client coming in, you're able to run at 90%. So your utilization of your resources are better. You are able to get a better margin. That's the way how business works, right? So sustaining a client over extended period of time also give you more time to do R&D, and also you have more time to look for new customers as compared to someone who doesn't practice ESG, and they have to spend a lot of time, to look for new customers because they lost their old customers and their resources are being underutilized, right? And for a company, if they are able to address ESG considerations, they are also more likely to be able to attract customers. Back to the environmental factor, we as always talk about energy, right? But what about the circular economy? I'm sure that circular economy is perhaps a lesser heard of term by a lot of investors, but perhaps for the investors here, you have already gone through circular economy. So circular economy is quite important in terms of the waste management and also waste recovery. So according to the exact same report, again, if you have time to look up for it, it's a report by PwC. In Southeast Asia region, it is expected that the waste generated would increase from 150 million MT to 300 million MT by 2030 from 2016. And Malaysia itself, we have policies and roadmap to promote waste reduction initiatives, but we aim to hit 40% recycling rate by 2025, but we are still lagging behind at a 33%, which is relatively behind some of our neighboring countries. Okay, but back to understanding how these ESG practices work, how circular economy work. I give you an example. There is one packaging company in Malaysia. Again, it was listed this year, and it fits into the circular economy. It's a packaging company. It also packaged to solar, packaged to semiconductor. There are also other peers in the packaging industry, but they're using different kind of packaging material, right? One is using recyclable and reusable packaging material, and Europe, they are going to be very stringent in terms of the material going through into their country by 2025. So imagine that one is recyclable and reusable, and another one counterpart may not be so. So for a customer point of view, for someone who needs the packaging services, it's very natural for them to prefer the suppliers that are able to adhere to the circular economy over the other suppliers that are not able to recycle their materials effectively. In US and Europe, disposal of the packaging material and also disposal of the waste is very, very costly. It's not happening in Malaysia yet, but over to the Western countries, it's very, very expensive. So to be able to fit into the circular economy is very important, right? And I think over in the slide, you also see that over the left, there's a writing sustainable business practices, leading also to higher quality earnings, right? Now, companies that are seeking to raise funds, except for the funds from bank, because we will talk about bank later on, I believe that we are, as I mentioned just now, we are reliant on coal for power generation. 75% of our electricity are generated from there, from coal and gas. And we are currently standing at a renewable energy capacity of 25%. Of course, we are targeting to hit 40% by 2035 and to slowly shift away from fossil fuels, right? So let's dive deeper into this. Why is, solar being preferred in Malaysia? So Malaysia has a decent solar radiation exposure, typically around 4 hours depending on where you are. And Thailand, I think we can go up to 6 hours. And also we have the benefit of being one of the largest palm oil planters in the world. And we have the biomass from the palm oil industry. And mini hydro are subjective to river, whether the flow is consistent, subject to rain as well. And so far, I think we do not really have a lot of large scale hydro being approved. Okay. So when it back to funding, so why is funding important? when going into whatever project you are in, okay, funding is very important because it directly impacts your cost structure. The higher your cost of funding, the lower your profit margin. Again, reflected into here, ROE, net profit margin, right? So some of the examples that the companies that has received some funding include one of the companies, I think the company start with C. They have quite a bit of trouble in terms of retrieving their trade receivables. Fortunately, they got funding from Jekyll Capital. And another company that is in GN2, which is cash status, I think they received funding from Big Green Power. And one of the major EPCC solar company in Malaysia, they have concession asset, but most importantly, they have also received funding and investment from Chudenko Japan. So all these companies that are, following the ESG aspects, they actually is easier for them to raise funds. So lower financial costs and also better margins for their overall company, right? And let's talk about the bank. Okay, so specifically, how are banks involved in terms of this whole ESG picture, right? Banks, they're involved in two spectrum. First one is promoting the ESG practices as well as making financial decisions. ESG practices, we have already mentioned some of the things that they do, includes having a good governance, the transparency, and also social impact, giving out, the financial relief, and also the E part. How does a bank, let's not talk about the, electronic part and reduce the use of paper, but really, how do they assist in the E part, right? So most of the banks now, they're integrating ESG into their day-to-day operation. And of course, it's not easy, especially when they have to follow some complex guideline. I think includes a GRI and also Bank Negara's Malaysia Climate Change and Principle-Based Taxonomy, CCPT. And you have to follow the guideline and also translating them into actual practices. Following is following. Into daily practices that is efficient is another thing, right? They also have to measure whatever they do, what is the indirect environmental impacts. So on this part, perhaps they could have a third party appointed to get involved. But again, it's all about cost as well. Imagine the audit process, how much time it takes, what are the costs, monetary costs and everything, right? So this will result in an increased cost for the banks. But they are still taking a critical role in terms of financing for a lot of companies, right? The backbone of Malaysia is SMEs, and PLC also play a role. So banks that are providing the financing is very important, right? So without their financing, without their role, I think a lot of green initiatives would be pushed back. Some of the ESG financing by the banks, just to name a few, is the RHB Sustainability Financing Program, SFP. I think they're targeted to hit 1 billion worth of new financing by 2025. And we have OCBC Bank Sustainable Financing Initiative. You can see the name much or less the same. They are doing quite significantly in terms of they are having one of the Islamic multi-currency sustainability linked financing. I think it's one of the world first few that does it. The financing was supplied to one of the largest telecommunication group in Malaysia. Okay, and at the same time, OCBC also supplies sustainability linked bond issuance to a REIT in Malaysia. So all these financing initiative, they are offering a lower financing cost, provided the people who raise fund, they are able to achieve their sustainability target. Again, sustainability, it's all about sustainability. Whether it could help in the environmental and also the overall economy to sustain, right? Again, if you could achieve the sustainability targets, you might get a lower financing rate. But of course, if you are not able to do so, there might be a penalty in the form of increased interest or other form of penalty, right? We also have Bank Islam green financing projects, which focuses on low carbon and also ESG linked financing for SME, for corporates. So far, I think they have approved quite a significant amount. I think amounted to 2 point something B. Okay, so as far as a lot of companies that are on the front end, solar companies, RE companies, and also companies that are helping the circular economy. We have companies that are involved in the EV value chain. Although it's a semiconductor, but it's supporting EV, so indirect, it's also reducing the carbon footprint, right? All these companies, they are also backed by all these banks, the banking sector. They are the backbone of the Law of Green initiative. Okay, but we talk about banking, how do they support, but how does it penalize that people who do not believe in ESG, or not to say not believe, but people are still not complying to it? There's actually, in fact, for Malaysia banks, there's a discontinued funding for projects that do not align with ESG principles. So, for example, for coal-fire plant and also thermal coal mine projects, or also some greenfield projects for oil explorations, reduce funding, or they will increase the cost of such projects. Again, it's always back to business. When the cost increase, the margins are lesser, so making it less attractive as compared to them venturing to RE or greener energy projects. So lesser people will actually get involved in non-ESG compliance projects, right? I think banks in Malaysia, in conclusion, they are increasingly factoring ESG criteria into their financing decision. It would direct impact the companies or companies to be receiving the funds, right? And ultimately, this forced a lot of companies to actually follow the guidelines of ESG as well. Is effectively a very good thing, right, for the banks. So how about EPF? I think EPF being one of the largest investors in Malaysia, a lot of us, we pay a lot of attention to what of the strategies are being taken by EPF. So to start with, I think as highlighted over here, EPF committed to move towards achieve a fully ESG compliant portfolio by 2030. In other words, even though your company is performing relatively well, but it's not ESG compliant, EPF will not buy. It's simply as that, right? And actually, they are also aiming a climate neutral portfolio by 2050. But let's talk about the nearer term, the 2030 first. So when EPF being one of the largest institutional investors in Malaysia, okay, locally speaking, they would push a lot of institutional investors towards sustainable investment mandates, okay, to reflect how these institutional investors they would invest, so that they could align with EPF since they have a lot of funding. So to see how these banks could change their mandate, or investment bank will change their mandate to also incorporate or force to incorporate ESG in their investment decision. So EPF has, in such a way, already set a benchmark for investors and also, of course, as we mentioned, the investors, a benchmark for having to incorporate ESG practices in terms of the company that we are investing. So globally, I think ESG assets are growing very well. And for those who are investing in the US market, so doing reasonably well, a lot of ESG-based ETF. I'll show a simple chart later on. But locally, MSCI Malaysia ESG Leader Index has performed relatively well as compared to traditional MSCI Malaysia Index. So I think you can have a check. I think analyzed over 3 and 5 years, they're still outperforming the traditional MSCI Malaysia Index. So realistically speaking, Malaysian market is actually a quite compact, or again, we are not a ultra large scale market. The news flow is going very fast amongst investors. So imagine this: if I were to tell you, EPF is going to invest in a particular company tomorrow. So what will happen to the share price of the company, right? So in a lot of investors' perspective, EPF being one of the largest investors, of course, they've done their due diligence. Of course, they've done their homework, and it's making sure that the company is good enough to invest, right? It's what we call smart money. So immediately, it will draw a lot of investors' eyeball or attention towards the company they are going to investing in. Okay, again, just by practicing it, and then EPF, if you're lucky enough to have EPF to come in, so we enhance the brand of the company, of course, enriching the valuation of the company itself. Again, I back to square one. Share price over the short term is always supply and demand. So if you're looking for a company to perform better, there's two ways. One, the fundamental of the companies is continuously improving, provided the company is continuously, following the ESG guideline so that it wouldn't face a devaluation. Second way is having a re-rating. That means that the market used to give this company a 10 times PE, right? If the company were to maintain the same level of earnings next year, what would happen to your investment if the market were to give a 15 times PE? Immediately, without fundamental changes in the company, your investment would result in a 50% capital gain, just like that. So ESG in the future, it might be scaling off a re-rating in terms of a lot of companies that initially they might not comply, but suddenly comply. So there will be fund flow that goes into the company, and fund flow, very simple, is equivalent to demand itself, right? So EPF being setting a standard, and if you're seeing EPF investing in a company, it's very likely that ESG will continue investing in them unless the company has some non-compliance in the future, then it's a different story, right? So we talk about equity companies so far. Of course, our focus is still in equity and also companies, but how about bonds, sukuk? So according to a report by EY and also Capital Market Malaysia Research, Asian 6, namely Malaysia, Singapore, Indonesia, Philippines, Thailand, and also Vietnam, the sustainable bonds and also the sukuk has seen an increased growth. So interestingly, Malaysia is actually a leading issuer in terms of SRI sukuk among Asian 6 countries. Okay, I think accounting to around 3.9 billion or 56% of the total Asian SRI sukuk size. So, but based on the observation here, you can see that the value and also the volume for the sukuk issuance had increased significantly, right? Sustainable bond, again, sustainable. When the bond, okay, two spectrum to this again. First spectrum, for company that want to raise fund, if they are complying and they are considered sustainable, they could raise fund easier at a lower cost because there's increased demand. So the requirements on top of the yield of the bonds or sukuk will be relatively low. Again, this will directly translate into the company having more capital, more what we call cheap capital. They are able to grow faster, and their cost and also cost is lower, margin is higher. Hence, it's a positive reinforcement for the companies that are adhering to the ESG, and they are able to issue those sustainable bonds or sukuk. Might not be the company itself to issue, but perhaps they could have a syndicated bond together to bundle together and they issue something like that, right? So in short, as long as a company they continue to adopt to ESG standards, I think there are lots of merits to it itself, right? This is on the bond and also sukuk part. Okay, if you are very busy and you are not able to go and handpick, go and look into companies that are go and fact check whether this company is actually ESG compliant or not, you do have specialized funds in Malaysia that could help you do that. We have a list of sustainable and also responsible investment fund, what we call SRI funds. Basically, they are investment vehicle that consider ESG criteria when they are making investment decision, right? Their aim is to generate financial return while also producing positive social and environmental outcomes. Okay. From what I know, these funds are actually in line with the United Nations Sustainable Development Goals, UN SDG. You will see in some company annual report, they do have mention of UN SDG, which goals specifically they are in line. And I think we also have a SRI Sukuk framework back in 2014, which to help promote and enhance the principles of Malaysia Islamic capital market as well, right? But back to the fund, I think as at 2nd November 2023, which is updated version of this slide, there's actually 60 SRI funds in Malaysia so far. with a NAV, net asset value of 4.8 billion, around that figure, right? And this is the chart, a short chart of indicating the RA, the return of equity mix allocation, and also the fixed income. How do they perform? Okay, this is for the actually for the foreign market. It's not for Malaysia itself, right? And the question comes that how do we access to ESG details, right? Where do I actually look for this kind of data and all? I'm going to share screen, and let me just stop sharing my slide for a while, right? Okay, I hope you guys can see. Basically, when you go into Bursa Malaysia website, log into the annual report. There are generally two types of report that the company have. The first type, if you are lucky, they would split it off. They have a sustainability report specifically talking about the ESG. The sample here, we are having, actually they changed their name, Kinergy, but never mind. Over to here, you can actually see what kind of initiative they have do, what kind of target they are they, how are they, adhering to the ESG, right? Okay. Okay. So some of the, to a stakeholder, I think this is for the S part. And for larger scale companies, let's say for Yinsen, although they are a oil and gas company, but I do think their annual report is one of the best fabricated one in Malaysia in terms of telling you what they have done in terms of the ESG part. I think a bit of lag on my end. Apologies for that. Okay, so you can see what is the greenhouse gas emission and what is the carbon intensity. I'm not too technical on this, but you can see, what kind of things they actually did. And environmentally, ESG highlights, so, zero hydrocarbon spills in terms of if they are in the upstream, then it makes sense that no spills of hydrocarbon into the sea that impacted the marine life. How much waste was being recovered, and the balance of their employee headcount, voluntary employee turnover rate. What's the turnover rate? I don't know in this industry whether it's a benchmark of 8.89%, but of course you can look at the peers again, the platform I told you just now. These are some of the examples that you can actually look at on how do you actually look at their report. Okay, so let me share my screen on the slides again. Okay. There are also, of course, this company is just for, purpose of study. Special thanks to the analyst that wrote this. Some of the analyst report, we have a ESG rating. Of course, how do they categorize the ESG, and then how do they put 1 star, 2 star, or 3 star is solely up to them. If you really want to know more, you can ask the bank itself. But if you do not have too much time to do more, again, you can look at the analyst report where they have the ESG rating, so you can have a rough idea of how this works, right? And with that, let's move into the Q&A session. We'll again, being not a subject matter expert, I hope to answer whatever question you have still. So feel free to have an interesting discussion for the ESG now.
All right, so let me just take over a bit. Just put up my slides. All right, so yep, just a reminder to everyone who have question to ask. So please just put it into the Q&A box instead of the chat box so that we can address your question accordingly. All right, so let's start off with the very first question. So are there any evidence with figures or reported surveys that confirm companies within FTSE for Good enjoy higher ROE and NPM due to them having ESG investment and not the other way around?
Right, thank you for the question. I think I mentioned that the report, let me send you the link over in the chat. Okay, so everyone can enjoy it. It's a very good and comprehensive report. So you can have a look over to the report. So far, logically speaking, and that is the way, and they are having a higher ROE for the FTSE for good, specifically for that index, right? Due to them it being, again, not ESG investment, but being complied to ESG and not the other way around. So logically speaking, if you are looking into any company, but they are having issues in terms of, let's talk about the social part, right? If you are investing into a company, let's say back in 2021, I guess, there's one particular technology or electronics company that have a social issue. Initially, I think they have over 1 billion market cap, but due to there are arguments about the labor practices and everything, they have lost their major client. I think the client is a very famous hairdryer or vacuum company. They lost the client. Subsequently, in the next 2 quarters, I think in the third quarter, they went into losses because there's cancellation of orders, loss of customers and everything. So they have to shut down the plant. So there's a massive loss of value in terms of companies that are not complying to ESG itself. So if you ask me, is there possibility of companies that are not complying to ESG to have a higher ROE and net profit margin? Over the short term, there is a possibility. But again, back to the keyword that we have highlighted multiple times today, sustainability. Whether such practices are sustainable over the long term is also very critical for the company. So hopefully it helps.
All right, so yeah, moving on to the next question. So can you share with us from an investor point of view, why might ignoring ESG factor be considered as a costly mistake?
I think apart from the electronics ones was a very good example that we could give you for the EMS company, the one that deals with the hairdryer company. But if you want another example, then probably you try to look at companies in the energy sector, right? Subsector of the energy. Companies in the EPCC segment, despite that, yes, there's higher competition, the margins are getting lower. But if you compare to the traditional oil and gas company valuation, you'll notice that a lot of oil and gas company, they are having single-digit valuation. Whereas, generally speaking, some of the EPCC companies that or RE companies that I look at, they are enjoying at least 20 times and above PE. So this is still not a costly mistake yet, unless you are investing in company that have a massive number of laborers. One of the industry that has been discussed that have to be careful is the furniture industry, which they have a decent amount of employee, anywhere around 500 to 1,000 for larger scale, or perhaps 300 for smaller scales. But you have to be careful when a company is not dealing well with ESG, right? The first one, if it's not what we call, it's not towards the ESG angle, which is still in the hydrocarbon or the traditional energy sector, perhaps their valuation may be lower due to insti investors that are moving their fund away from that. So that will impact your capital gain and loss. And as for other example, let's say for social itself, if you're investing into a company that have a lot of labor, you can check on the annual report, what is the employee headcount. If you will see a higher turnaround and you notice that their employee feedback are not great, so you might have to be careful. But because if there is a change in terms of their client preference on the compliance of ESG, level of ESG compliance of that company that you're investing into, they might lose out a client. If it's a major client, in short, you will see them having big trouble on financial performance later on.
All right, so moving on to the third question we have is, how do changing global climate change policies impact the ESG consideration of companies, and how can investors navigate this evolving landscape?
Well, okay, that's a very big question, but if you were to catch on to the global wave, I think the greatest source is just look at some of the policy changes in the country itself, or externally, if you're looking at foreign countries, just look at the fund flow. To me, money is always the most honest thing. Wherever the fund would flow, it is most likely the thing that is favorable over the long term, right? Whether you say global climate change, there are a lot of discussion about climate changes even before the popularization of ESG. But why only become such an important thing now? Is because the change of fund flow. People are starting to notice it because fund flow are moving away. So fundamentally speaking, if you really want to look at the policy changes, you can look at some of the announcement or the policies by the government. For example, NETR by Malaysia itself, we are talking about, there are 6 initiatives, including, I think we want to have a mega scale kind of solar farm, and also, of course, mobility, and also there's a mention of hydro as well. There are a total of 6, I don't remember all, but generally speaking, if you want to look into future of investment, you can look into such policies, and then try to match back into your own, portfolio. So you can have a view whether your portfolio now fits into the future landscape itself. If it doesn't, then you might have to reconsider. But if it does, then congratulations, there might be a re-rating in terms of your portfolio, because the company has been investing into is doing well, I presume. But in a change of policy, if it's a positive one, there could be better things upcoming for the company as well.
All right, so next question. So how can we effectively manage the trade-off between different environmental goals, such as reducing greenhouse gas emission and protecting biodiversity?
I do think that is not we that to manage, because we as investors, our responsibility is putting in our money responsibly into investments, but we do not actively manage. How do we go and try to control reducing greenhouse? Yes, you can do perhaps lesser aircon and take public transport. And if you are landed, then perhaps you can consider a solar panel. It's very cost effective, and protecting biodiversity. I don't think everyone has the what we call privilege to do it. A lot of us are, we are busy with daily life. We do not have the privilege or luxury to spend a lot of time in terms of biodiversity. But back to the topic, as an investors, what we can do is responsibly put in our money into companies that are doing such things.
All right, so the next question, how can investors effectively manage ESG risks in their portfolios?
Right. Okay, I'm not sure if you are talking about whether the company I'm investing is compliant to ESG, or I myself, my portfolio itself is compliant to ESG. I presume the companies I'm investing, whether they are complying to ESG, right? I think this also applies to one of the questions that you have. How do I know whether a company comply with all the ESG requirements? So the way to know, again, look at the fund flow. I think that's a very honest answer. Okay. And then if you do have the time, you can look at the GRI. I think it's a very holistic, but it's also very complex indication. So another way around, the easier way is to take on the effort of others. It will be the easy way around. Okay. So let's say for the report that we just checked just now, let me quickly go back. Okay, never mind. Like the Inari report we shared just now, actually they have a quantification by the bank itself. Of course, when you ask, how do we as investors, we go and quantify this? Even Malaysia, we don't have a really credited firm that could quantify greenhouse gas emission or how much social impact that the company do. It's a very professional thing for a particular auditor firm specialized in ESG to go and quantify it and then go and audit it, whether it comply or it doesn't comply. But as an investors, what we can do is to go and check on the analyst report and also look at the, annual report of the company, what at least they have done so far for the company, for the social and also environmental and also the governance. What have they done, right? If you want to quantify the social impact of that company, I do think you need to spend a lot of time. You have to go overseas. You have to take a specific certification to go through the quantifying process and also auditing process. I can say it's an extremely complicated process, but if you will manage to do so, I think your money would come from auditing and also quantifying process. A lot of PLC, they would come to you and ask you for the auditing instead of you choosing companies to invest by the time. So yeah, it's a completely different spectrum things to discuss on.
All right, so this question is very long. So ESG implementation seems to be revolving around the decision making and style of management of a company, which the key is up to the management unit of a company. So how can employees with lower decision making write catalyst initiative of ESG implementation in a company?
Right. Okay. If you're talking from a stakeholder point of view, from an employee, so whether presumably the question is about whether it makes sense or not in terms of the ESG implementation. So one of the things is that, again, you have to understand whether is it really making a social impact, or the company itself is using ESG to, in the name of ESG, but it's trying to lower the cost, right? So which has impacted your personal welfare, whether it makes sense or not in terms of the, implication of that ESG implementation. So you can check on your peers, okay? The direct one would be your peers, whether the peers are doing the same thing or not, okay? Let's say, for example, just to save a particular cost, it increase your working time per day by, let's say, 10, 20%, it doesn't make sense for you, okay? And it doesn't justify the effort also. There are companies that are trying to, use ESG as the name to put in for their own agenda, okay? That's all I can say, for their own agenda. And whether it makes sense or not, very simple. You just look at your peer, whether they are having the same thing, or you can, to certain extent, have a direct talk with your employer. But I think that the question itself is on very personal level and it's not on investment level. So unless you are talking about investing into your company itself, you offer ESOS, or perhaps you offer a pink form, and you do not know whether the ESG implementation is right or wrong in your company. If in that case, perhaps I still think the best way is to refer to your peers, whether they are doing the same thing. And if you have the time, you have to really refer to the GRI and also some of the ESG guidance available.
All right, so we don't have much time left actually. So let's just take one last question, right? So quantitatively, how can investors measure the social impact of a company, and what challenges might they encounter in this process?
I think I answered that question on Malaysia. We do not have a really quote unquote license to in terms of measuring the carbon emission, carbon footprint. We still, let's say for what do we call there is an exchange we have in order to reduce the there is a need for a specific certification in terms of how much is your carbon footprint, and also it's like Tesla, one of their largest revenue and profit is coming from carbon credit. Yes, carbon credit. How to certify that carbon credit itself is a very complex thing. It involves a long value chain to credit the carbon credit, that the company have, right? So it's a very professional and very diligent kind of a process. Malaysia, we do not have a specific agency that can do that. We still have to look for foreign entity in order to do the accreditation. So again, I think that's a bit tough for retail investor to try and quantify these kind of things. And I do see a question from Tony. Maybe after the question, Tony, I can pass to you for the closing. About ESG investment guideline of EPF, is it mandatory for other funds to follow, or is it only to EPF funds? To answer your question, it's only to EPF. Okay, it's only applicable to EPF. But the problem here being that if you're a fund manager, would you go against the largest fund, one of the largest fund in the country? And also, it's not only limited to EPF itself. There are also foreign funds as well. Would you go against the dynamics or the landscape changes of EPF and also foreign fund? Will you go against that? Normally, the answer is no. So, although it's not a mandatory application to other funds in Malaysia, but I do believe the fund managers, they would follow suit as well.
All right, cool. So, yep, I would say that would be the end of the session. So I think, thank you very much, Max, for such a wonderful sharing. And we do hope that this session today did add value to your investment journey. So once again, thank you very much for coming. And yep, Max, perhaps you have any last word to say to your audience right here?
No, but if you do have any additional questions that I do hope I can answer, you can reach out to me at my Facebook page, Want to Invest, for that. So yeah, again, thank you everyone for joining, and thank you, Carmen, for hosting. Thank you everyone. Have a great evening.